Now, the latest round of US tariffs is putting pressure on China's manufacturing sector, while some manufacturers are struggling with shrinking export demand. Others, especially in e-commerce, are still seeing strong orders. How are businesses adapting and what does this mean for global trade? Take a look at our next report for more on this.
The latest round of US tariffs is adding pressure on China's manufacturing sector. US President Donald Trump has imposed a 10% duty on Chinese imports, affecting hundreds of billions of dollars in trade. The move is part of his broader strategy to restructure global trade, targeting allies and rivals alike. For Chinese businesses which supply artificial leather for shoe manufacturers, the impact is immediate. With many of his clients exporting to the US, shrinking demand is forcing them to negotiate lower prices.
Yes, there is a major impact. Now the US tariffs have been increased by 10%. This has put a lot of pressure on us in China, and factories are also under pressure. The traders have pressure and so do the factories, which makes it difficult for us material suppliers to do business.
Some Chinese manufacturers have relocated to Southeast Asia to avoid tariffs, but challenges like payment delays and currency risks remain. China's industrial hubs are now facing a critical question: how to sustain exports amid rising costs and shifting global trade policies. Despite rising trade tensions, China's e-commerce driven exports are holding strong. Fast fashion giants Shein and Temu have leveraged a US trade rule called the de minimis exemption, allowing shipments under $800 to enter duty-free. However, Trump's new tariff plan includes duties on these products, threatening the low-cost business model that has dominated online retail. For now, companies are continuing operations while US authorities determine how to implement the new tax policy.
I am relatively optimistic because if you think about it, the United States definitely will not produce its own clothing. Clothing is now generally produced in China or in Southeast Asian countries, and it's impossible to develop factories in Africa, right? So future prospects for the processing industry are still pretty good in China.
China has strongly opposed Trump's tariffs, implementing countermeasures to protect its economic interests. The country's manufacturing belt employs millions of workers, many of whom are migrants from rural areas. Any sustained downturn could have wider economic and social implications. Meanwhile, China's broader economy faces headwinds, including slowing growth, a property sector crisis, and high youth unemployment. The government is expected to respond with trade negotiations and support measures to stabilize key industries. But with the US-China trade war showing no signs of easing, manufacturers are bracing for an uncertain future. Business Bureau, WION World is One.